Is it time? Is it time for the comeback of Brent Crude oil, guys? BCO USD on Oanda. Probably a whole bunch of other tickers. If you're not on Oanda, UK Oil, I think, is one of them. And guys, I was just I did podcast on 10-year T-notes, U.S. bonds, treasuries, and I was just having a little fun and overlaying that and seeing. I don't trade correlations because they change, but I like having fun and seeing what's up when there's strong correlations. And the oil had almost inverse correlation with the 10-year treasury bonds. So every time oil went up, the treasury bonds went down. So that was kind of interesting. I don't know exactly why, the economics behind that, all that reasoning, that's like really out of my sphere. All I know is chart price action and still learning and trying to observe through learn through observations, through teachers, through all information I could ingest and then analyze with whatever information I already had, and recompile a new thesis of what I think is happening, guys. But anyways, look at that. This is the monthly candle chart, and before we do some stage analysis on the weekly, rock and roll ride, right? Whoa, look at that. Look at that top here. 2008 top, almost tweezer tops. I know that the high has to be the same, but that's not good. Price sucked back in. Price went up, sucked back in. Especially when you see that on monthly candles and then an exponential, very severe incline going upwards. You got the clues add up. Here you could tolerate this wick, and the confirmation is the next red candle. And this is a big warning sign. You should have exited at the close. Worst case scenario, at the close of the month. If ever you were sleeping or on vacation, you probably entered here, and after that went all the way up. Or you could have even entered probably lower. I don't have stats before, but here would have been a great warning sign that that's an exit, guys. And then down, and after that another retry, sideways move, and that sideways move could have went up, but what happened instead? Right here, you don't know, right? Lower highs, we'd probably have right here. Here would have been I could have had the breakout line right here around the 115 area. And as long as you don't have a close above that, you can't play the bullish scenario, guys. And here's a type pattern right here. And what happened? Ooh, you have a close here. Okay. And after that, that probably gives you the target down to the slower level. Another close below it. Now you have a bigger pattern. And that bigger pattern's target was easily reached 1 or 2 months later. 12-month moving average going down. Oh, it's going back up. I'm in, guys. Never want to buy when the trend is down. When the moving average is down, don't want to buy. If it goes up, fine. But I'd actually be looking for a short area right here. An area to re-enter shorting. And after that, sideways move. Nice, stage one. And now you could enter. So a whole bunch of things were happening here. Look at that. Nice cup. Handle. And I've learned this with reading Trade Like a Stock Market Wizard from Mark Minervini's. When he had the volatility reduce, and after that he kept an eye on his radar. So let's say here pull back 30%, 20%, and then the next low 12%, and then the next low 3-4%. That was a warning sign to get down on his radar, that contraction and volatility. And then you could have had a pop did pull back. So if your sell stop, you had to make sure you had your sell stop lower if ever you got in, to not get whipsawed out, shaken out. And if you think that was too early, you could have even actually waited for even a bigger base. So I like always having breakouts, and then the second breakout, I trust it more. The 30-week moving average, in this case, the 12-month moving average, is even more inclined. So when you get the other one, you have another good shot to have it really go in your favor. And this is what really you like, guys. I read, I think on StockTwix, somebody saying that playing stage analysis is a question of trial and error until you really hit the correct trend. And let's say here you would have missed it, or you got triggered out. Okay, keep the chart on your radar, and next time it builds, it's set up, you get back in, and eventually you get one where as soon as you're in, it barely pulls back, and you're off to the races, guys. And that's what you look for. This is healthy. So if ever you're in a stock and right away it pulls in hard and deep inside, it's a good reason for you to reevaluate, cut your losses, and just jump back in if ever the chart gets better, or else just go to another chart that it hasn't given you negative signs, that has possible negative signs. But possible negative signs are not negative signs proven with the pullback within your breakout line. Just enter another stock that's ready to explode, and whether you make your 7% or 10% on that chart or another one, might as well move it to a better setup that is not going against you guys. And that was just beautiful, guys. Look at that. Pull back, close the 12-month moving average, another area here, right here, another area, possible entry here, low risk entry, bounce off the 12-month moving average. And now what we have is 1, 2, 3, 4 months consolidation pattern, and actually broken out of. Look, unless it reverts Monday, the last day of September, we have another monthly defined continuation breakout. And after that, look, there's not much resistance along the way, guys. Next whole bunch of resistance is right here in the zone, around the 99 level, close to 100 level, and a little bit more when you go around the 106 and then 115. This is the base, man. This is the purpose of the base, to digest all the people that bought up here, went down here. Eventually, they want to cut their losses. They panic. They're depressed. They start selling, and new hands get in, strong hands that are willing to ride the stage 2 upwards. They start taking over right here at this level. And after that, up, up, up. Let's go to the weekly. Wow, okay, what do I have here? Look at that beautiful classic stage 2, guys. Look at that. It's just beautiful. Not even challenging the 30-week moving average. The Ichimoku cloud defined the resistance way off. It's like this is a perfect trade where you just sleep night after night after night. Just down, down, barely any green candles. And after that, your exit signs are where? Remember, stand. You have to wait for a pullback. When the pullback starts going back down towards previous target, you could confirm here with a relative strength indicator. Now against the SPX, up, goes back down. If you do the traders where your sell stops here, if you do the investors where your sell stop here, you could have also had a trend line. Stance trend line is 3 points to create the trend line, and a break on the 4th. You're out, or at least have your position. So those are beautiful ways to maximize exits. 1, 2, 3. Here, you could have exited here. If you didn't draw that trend line, then you would have exited here on the way back up. And worst case scenario, if you violate that 30-week moving average, that's like, okay, I'm out. So you would have still have had a beautiful ride. Probably entered right here, all the way down here. And this overlay, Mansfield Relative Strength, is just awesome, guys. It's red. It's telling you, like, it's flashing. Underperforming the SPX, declining 30-week MA, price below 30-week MA. And most of the time there, you could add your extra criteria to make sure the stock selection is more solid. But usually this maps pretty well with the entry and the exit to maximize the trend. Scoot over. Beautiful, beautiful. Stage 1. trying to go out, but not quite out. Some price action going back in because probably you didn't have those monthly closes above those breakout lines. The higher trend has to be in your favor. And right here, this is the trend that seems to be the one that wants to go up. Even here, guys, see, you have some good signs that really wants to pop. High volume, green day. But you're still not. You see here, you could have said, oh, Pat, why didn't you get in right here? Well, let's go on the monthly. Oh. Well, you could have went in right here. This is the one that had the pullback, guys. So you could have actually went here. You had the volume. But it's the first breakout. You could have said, maybe I don't want to go in right now. Pull back in. You probably would have been triggered out unless you would have put your sell stop really low. But that's all right. You get out. And then if ever the pattern, the chart gives you another signal to get back in. Oh, yeah, you would have. Oh, look, if you would have been, you could have put your sell stop all the way down here. But you don't want to waste time. That's another thing. Not because the stock eventually goes up in your direction that it was correct to stay in the stock after you entered here and went back down. Because it could have easily went all the way back down and just crashed. So as soon as it went back down or it's not exploding in your direction, here you could have had warning signs. Okay, I'm going to exit here, reevaluate. You see that there's a nice resistance level being defined. Might as well wait for that resistance level to be close to the top before getting back in, guys. You avoid all that risk. You avoid the praying to the gods of the market. You get to sleep at night. You just wait, guys. All right. Off we go. Goes up. Pull back. Goes up. Sideways move. We saw this on the monthly. And now you had a nice bounce up. And this is just continuation, guys. So the good risk reward would have been here. If you enter right here, you have to expect a pullback, guys. You have to expect 30-week average. I think it's going to go like that. You have to expect a pullback close to the breakout line right here. Pretty sure this is the weekly defined one. Pretty strong one right here. If it pulls back too much deep below that, then it wasn't meant to be. The stage 2 slowing down. So you either wait for the pullback here around the 80 level. And if it's on contracting volume, full steam ahead. Or else you enter here and you put your sell stop. Put your sell stop down here. Or below 30-week moving average right here. But make sure you don't get whipsawed out, guys. And that looks pretty good, man. That's a nice, powerful stage 2 for oil. I don't know how high it's going to go. But there's a vacuum right here. And strong possibilities, guys, that we go back to 100. Since we're out here. Seems clear ways all the way to 100. And eventually maybe 105, guys. Just a question of entering in the safest area possible, knowing where your support is, knowing where the price action, you don't want it to be. If it goes back in within here, you don't even want to be here. So even that sell stop is pretty good right there. All right, guys, let you go. Stage 2 for oil. Ciao, guys. See ya.